my goodness, my hair.
Oh yeah,
Horrible.
you should probably fix your hair.
I should probably. Hey, oh my goodness, that looks rough.
Here.
All
Hi,
right.
everybody.
What's going on, brother?
How are you?
What's up, Mom?
Why does your thing say Jacob Jennings?
I kind of logged in under him to start this tonight. He here, we'll change that. They are on a train, or actually they might be on a plane by now, or maybe in an automobile. I don't know. But they're on their way to Colorado. So
Right.
the or the new Derek Shepard gets to be host tonight. Bo's heading out there with him, so let's see. We got everybody showing up. There's Emily. Nice.
I'm gonna go to the bathroom. I'll come over there.
So how'd the homework go? Was it easy?
Yeah.
Good deal.
I found a lot of. I've been listening to this podcast, for investment for beginners, and they're talking a lot about. I think it's PE, or something, stocks that give out dividends. So I organized my little chart things like that, and I think I did it right.
Yeah.
Hopefully, trying to learn more about stocks that give out money for dividends. So.
Well, the good news is either you did or you didn't. You either did it right or you didn't, and we can fix it if you didn't, and if you did, it's already done.
Right. Perfect.
Right. Good deal. Oh, look, I don't know if Emily's talking or.
I'm talking to myself and yelling at the kids at the same time.
Oh well, multitasking.
I know it's
Yeah.
wonderful. Find my phone. I can't find it. It's buzzing somewhere. I can't find my phone. But anyway, I'll put it on mute before people start calling me and I can't stop it. Thank you. Mm-hmm. You want to say hi? No. And she's off.
And there they go.
All right. Okay. How's everybody doing today?
It's great.
So I came in listening in and I heard that some people were looking for some scans and they may have found some stuff. So sounds like people did their homework, which is really good.
It's exciting.
So let's pick up where we left off on Monday. And who wants to share on what they found when they went out and did a scan? And we can actually analyze it together.
Cool. Like just give you get on FinViz and give you, or the Thinkorswim. I did the one that I did. So the way I organized, why isn't my thing? The way I organized mine, all the ones I found weren't very bullish. They weren't bearish either. They were that word that you used where they went up and down like the
sideways in the channel.
Yeah. I forgot what word you used, but they were that. Then they all seem that, I mean, I guess I knew this already. I just was interested may see it, but in February, March, everything went, it all went down. It was crazy. And it makes sense, but it's just, it's I didn't expect every single one.
Yeah, I don't know that there were, I think there were quite a few, but I don't know that there were any stocks that were making, new highs, once the pandemic started, right? Everybody kind of went into freak out mode where they just sold everything and waited for the news to kind of settle down. And then you started to see some areas starting to inch up while others were left behind and so on. Yeah, but it would have been really, really hard to find anything going up in, between middle of February to middle of April.
Yeah.
But isn't it cool that now that you're looking at those charts, you're starting to see those trends and those, even though you're not, even if you didn't identify like a, a bullish retracement, you could see all these different patterns and all these different trends forming, during certain periods, right? And you can kind of see, oh wow, like this happened and that happened, and you can see the similarities in stocks that are in the same sector, or and stuff like that. So that's pretty cool.
Yeah, it was nice learning how to. I mean, and the crazy thing is, I'm taking a statistics class this semester, and we're like starting to do that. Like, hey, I know what this is already.
Hey, look at that. Hey, I want credit for that grade. If you get an A, I need like a dinner certificate or something. I love steaks.
Definitely.
I'm kidding. I'm glad it's helping. I'm glad it's all coming together. And this is what this whole thing is all about, right? It's like, we're here to help each other out, and and now it's helping you in another area. Now you can help somebody else in another area, and you can tell them, hey, there's this great little class that I take every Monday and Wednesday. Might want to come in and be a part of it.
That's funny you say that. I don't know. So like I was at lunch today in the lunchroom, and I had my laptop open with this on, and like this dude was behind me in the microwave. He was like looking over my shoulder. And you were playing like in the little corner because I was watching the video. So I was like listening to, and he's like, "What are you doing?" And I explained to him. And he thought it was really cool because like same thing. Like he was trying to, and we had this big old conversation in the lunchroom about stocks. So that's
there
interesting.
You go. Look at that. We're already making
connections.
I know.
This is the stuff that gives me joy. I don't, it doesn't take much to please me, but this stuff gets me super, super excited when I hear you guys talking like that. So you just made my day. All right. So did you want to share your screen and kind of show the folks how you did your scan? And
sure,
we can,
how do I share my screen?
Derek, I think you have to give him permission. Make him a host. So at the go to Jay's name. You got it? Oh, perfect.
You're co-host now.
Yeah, it should be good.
Screen. Got it.
Yeah.
Whiteboard. Oh, I get to pick which one. Cool. Thinkorswim.
So did you want to show us your scan? Did you scan on Thinkorswim or did you scan on Finviz?
Anything but porn. Jacob wouldn't like that. Anything but porn.
Or he would.
Are you sure he wouldn't like that?
Not on the recording. Like in private messages, he likes it, but I'm just saying.
We'll keep it clean. We'll keep it clean.
Yeah. So I did it on the website first.
On Finviz. Okay.
Finviz, and I'm sorry, that's asking me to do all this stuff. Zoom will not be able to record the contents of your screen until it is quit. What? I'm on a Mac, if that makes any difference.
I don't know. If you go to share screen and then you can pick which window you want to share.
Yeah. Let me try it again. Let me just exit all of this. Share
Yeah,
screen.
it probably tells you not make sure no files are put up or nothing, or
Okay.
it won't show all
Right.
that. There you go.
See it?
Hey.
There you go. Oh, look at
Yeah,
that. This makes me so happy that you guys are actually doing this stuff. I'm so happy.
So yeah, so this is the crazy one. So that one was pretty weird because like here, and then the whole time, like it's just been like up and down, up and down. I used a word in the video and I totally forgot.
Neutral.
I wrote it down. Neutral.
Yeah.
Yeah,
So what's that ticker symbol?
It's STWD, Starwood Property Trust Inc.
STWD. Okay, we'll save that one for another example we can use it for. So that one would not be what we were looking for in terms of a bullish retracement, right? It's not going up. It's a clear indication that it's not going up. It's not giving you those higher highs and higher lows. It's literally been sideways since March.
Yeah, that was most of them. And like I was playing with the other ones, but these are the ones that I saved. I think they're all like that.
Okay, so we're gonna do another scan on Finviz. So maybe it's what you put in your search criteria that ended up giving you just a bunch of sideways to neutral stocks. So
Yeah, where did you say you found those?
Yeah, I couldn't figure out how to get the search criteria again on mine either.
Okay. All right. Good. This is what I want to. This is what I want to hear from you guys. Like what you guys are struggling with, or what didn't come out right, or whatever, so that we can go back and read. And I don't mind revising a topic just because we've gone over it. Doesn't mean that I can't go back and talk about it again until you guys understand or figure out how to do it. So for sure we'll do that. But I'm glad that you, you tried to do it. You made an attempt to do it. So, okay, so they're on your descriptive, Jay.
So I
So,
did, the difference is I did this PE, that's the one that I saved. Just because I was messing with it after I did the other one. Sorry, I didn't save the other ones.
okay.
But I was looking at this thing about dividends, and I think that's what that one means.
Okay, so what you're looking for is that you're looking for companies that have a PE under 20, under 25, right? So if you guys remember from a few sessions ago when we're talking about fundamentals and how we look for company earnings and stuff like that, we use a Shiller PE ratio that kind of tells us what the mark is overall. So when we measure it against the S&P itself, the S&P usually is like, when anything is over 30, we consider it to be overvalued, right? So you're looking for things that are that have a P, stocks that have a PE ratio that's under 25. So you're looking for things that are either fair market or below market, meaning in terms of like when we're looking at comparisons to like real estate. So you're looking for things that either have a fair value in the market, right? Or things that are undervalued in the market. Well, in a bullish market, it's usually really hard to find things that are undervalued in the market because everything has been going up. Right. So in this case right here, I wouldn't use that as a search criteria for things that I'm looking for to trade. If you're looking for investments and you're not getting into the fundamentals of companies, then yeah, that would be a criteria that you could actually use. But when you're looking for just things to swing trade or position trade because you're just planning on looking for that bullish retracement to be able to get into a trade and run the numbers and pick a target profit, you're going to be in that trade for less than 2 weeks, if that, right? So the PE ratio will not matter as much because you're not going to be in that trade for a long time. Now, when you wear that investor hat and you're looking for companies that you're going to buy shares of and hold and, to pass on to your grandkids, then those factors come in. So if you go tab by tab, go back to the descriptive, and I'm going to kind of walk you through like what's important. Okay. So what's important there, you can have market cap if you want to. It's not important whether you have that or not, but if you want companies that are over a certain criteria in terms of market cap, meaning that you want those high flyer stocks, then you can certainly put it there. But it's not, it's not a must have, right? What's a must have for me is going to be your average volume, right? So the average volume has to be at minimum 500,000 shares. I even prefer over a million. Okay. I also would not care about the dividend yield. That's something that, again, that you would be using if you're looking for, stocks that you're going to be holding on for a long time. So that I would uncheck the dividend yield.
Do I market cap, get rid of that too?
You can leave that for now because you're gonna get quite a lot of them anyway. So you're good with that. Okay. And then the other thing that matters for me is going to be the price of the stock and whether the stock also has options. So on the far end of it, where you have the price, so you have the price over 10, and then the other, that's fine, that's perfect with the price over 10. And then right above that where it says option / short, right above the price over 10, you want to click optionable and shortable. Now, if you're trading stocks, that's not a big deal, but because we're going to be getting into options and we're going to be trying to look at options as an alternative to trading stocks, get used to always searching for companies that, that also have options, meaning that we can also trade the options in lieu of the stock. Okay, so that would be like the 4 main things that I would have on the descriptive. Now, as you get more advanced and as you start to learn more about companies, you can certainly start to play around with it and look for more things. Like if, let's say you want to break it down to a certain sector, right? You could have gone to the sector and said, okay, give me all tech companies. Right, you could have done that and said, okay, I just want all tech companies because that's been the high fly or whatever. But that's nothing to worry about for now, because all it does just reduces the number of companies that you're going to end up getting. But that's how I would have done it there for the descriptive. And then the other part I go to is the technical. So if you go to the technical, what you want is indicators. Okay, so because you're looking for a specific trend, we're looking for a bullish trend, we want certain things to give to minimize that list. Right now you have 197 companies. So you want to eliminate all the companies that are going down. So the way we do that is by using moving averages, right? And what we want is we want the price to be above these moving averages. So if you click on the 20, you want the price above the 20 because you want it to be in an uptrend. You're not looking for anything going down or sideways, right? When you do the 50, you want it to be above the 50. You want it to be above the 50-day moving average. So this is just an indicator that tracks the price of the stock over a number of days. So it tracks over 20 days, it tracks over 50 days, and also tracks over 200 days. You also want that. Okay, so now it's reduced your list to 114. And I pretty much, if you click on the charts now, or if you want to click on the tickers and copy and paste them into Thinkorswim, if that's how you did it, you can do that as well.
I went like that. Copy. You can do charts.
You can look at it within FinViz, but the charts are very, very tiny. You would have to almost like zoom in because it just gives you the list of everything.
Yeah. Okay.
So if you want to make it look nice and pretty, so you can go through each one individually, then definitely, put it in Thinkorswim. So now you go to your watch list.
I remember how to do this. Hold on, let me.
Oh, look at this. You are making me so happy.
Import styles. Okay.
So you were in the right track. Click on the watch list.
I think I'm gonna replace the ones I have right now, right?
Okay, so just click on that actual watch list where it says FinViz scan, or right click on it.
Another box popped up and it doesn't show it.
Okay.
Oh, but yeah, there we go.
You already got it. Okay, so you already copied and pasted. All right, perfect. So now take a look at that list. So now the way you have your link, those flags, you have your FinViz scan at 2, but your charts on 1 with the red flag. So if you want them to just kind of self-populate when you click on it on your watch list, change either that flag to red or change your chart flag to yellow, either way. Perfect. So for those of you guys who don't know what he just did, do you care to just kind of show them what I just showed you?
Yeah, it was at yellow, but I'm guessing this says red up here.
Mm-hmm.
This has to be the same color.
They have to be the same. Yep. So that when you click on it, it automatically populates that on the chart. Otherwise, you'd have to type it in on the chart symbol.
Cool. Oh, there's a bullish one.
So now, do you see the difference?
Yeah. Thanks. That helped a lot.
You're very welcome.
I watched the video twice.
So yeah, so when you're starting out, keep it simple, right? Don't the more buttons you click in FinViz, you're just, and you don't understand what they are, don't worry about it for now, right? Just do the most important things, the must-haves. It's got to have good volume, right? It's got to be above the moving averages. It's got to be above a certain price point because you don't want to trade penny stocks and so on and so forth. That's going to be your criteria for when you're looking for those bullish trades. And then you just go through the list. And the whole idea about this is not for you to go through and then trade all of those different companies that just came up on that list. It's to find 1 or 2 good ones, right? That have the perfect clean stuff that you're looking for. And as you get more advanced, you can even go through another process of elimination and say, okay, I just want the tech sector, or I just want this sector or that sector. As a matter of fact, Jay, since you already have this open, you're going to do our daily routine.
Cool.
So we're going to start, if you remember how we do the daily routine, we're going to start with the news.
So I share my other screen?
Yeah, I think you have to either stop sharing the Thinkorswim and then do another one, and then do your web page so that you can show. There you go.
Okay. I have the thing I have it right here. I have to go through my notes. I have the little thingy in here. I'm almost there.
You're good. Take your time.
I started
You
using.
guys, is this helpful, you watching somebody else do it? Because I know I move pretty fast. Is this helpful when you see somebody else besides me doing this?
I think it is because of those little minutiae that you just went through with that red versus right. Because if somebody doesn't have that set up, then you know how to fix it. Versus yours is already set up, so
Set
you
up
might
exactly. Yeah.
have forgotten, how, or not forgotten how to set it up, but forgotten, that little.
Mention.
Yeah, and I know mine is there, but when I noticed his immediately, so I was able to kind of help him and say, okay, this is how you do this. So yeah, I think that helps too.
I think it helps a whole lot actually, because then everybody else gets to see what it is from the beginning.
Perfect. All right, so Jay, you want to give us a quick synopsis of what you saw in the news today, or what you're reading there as your highlights there?
Yeah. So I go to so the Dow Jones, well, they all went up, it looks like, so it's doing pretty good.
Yeah.
Gold is still a little nasty. I think crude oil is a little bit better than it was before. And then this is the one that has all those red folders because I can't find that website. But
That's fine. So if you just go to the other tab right there that says latest news, right? That's going to give you like the, your bullet points, right? Yeah, right there, or even on the same page. Go back to the other page. Go back to the main page. And right where you have the Dow Jones, where you're looking at the Dow Jones, if you just move over to your right, there's you go. So you can click on see all news, and you can just kind of get the, the highlights of whatever happened that day. It's the same thing. So you can just click there and you can kind of get, okay, this is what's happening today, just get a quick synopsis. Don't spend, 3 hours reading each article. Just, read the bullet points and just kind of get an idea of what's happening today in the news, right? So once you get that, the next step to your daily routine is to
go to Forex calendar.
Forex calendar. Yep.
Factory.
We're gonna go to Forex Factory calendar.
Oh, this is the one with the little notes. There it is, little folders. So this is where I know that if these little thingies are red, that it's probably gonna mess with the stock market up or down. It's gonna more than likely do something to it.
There you go. So it kind of helps you prepare for the day, right? So if you know that you see that red flag, it doesn't, the red flag is not a sure guarantee that the market will move up or down significantly. It's just to kind of let you know, hey, warning sign ahead, kind of pump the brakes because you just never know, right? So it's not, just because the folder is red, it's not an indicator that the market will go down. It's just telling you that, news that comes out with, from that report may impact the market one way or another. So it's just kind of like to kind of let you know what's upcoming. So that was today, because today is Wednesday. And so now let's kind of put it this way. So if you are a morning person doing your daily routine in the morning, you would have been looking at what was coming out today, meaning you were looking at the economic calendar for what's happening today. And Jay, I'm also going to have you filter it so that you can remove all the other countries and just leave it for the US. So if you go to your little filter tab on the right, uncheck everything except the US. And then that way it makes that list even shorter. Look at that, right? You can also have it so that it shows you the whole entire week. And it's right on, you see what it has today? You can change that to weekly, this week, and then say apply settings. So now here's how I like to look at it. So if you're doing your daily routine in the morning, right, the day that matters is that day. So if this was, this morning, we would have been looking to see what news is coming out today, okay? If you're doing your daily routine in the evening, then you're looking at what's going to be coming out tomorrow because you're planning for tomorrow's trades. Does that make sense? Because you don't have to trade when the market is open. You can do your daily routine in preparation for tomorrow tonight. Because if you are working, if you're doing other things, if you got other things going on, you want to get the lay of the land of what happened. And at the end of the day, all you're doing is doing all of this to just prepare trade setups for now tomorrow. If you were doing this morning, you'd have gone through all of this stuff and then looked for stocks to trade today and put the orders in today while the market was open. But if you're not in front of the computer when the market is open and you're doing this in the evenings when the market is closed, then you'll be looking for the news that's coming out tomorrow. What happened today is done, right? Markets are like kids, they forget. Today happened, all right, moving on to tomorrow. So if you're doing this in the evening, if your daily routine is in the evening, then you're looking for news that is coming out tomorrow, or you're looking for events that are happening tomorrow, because that's what's going to impact your trading day. Does that make sense, guys?
Yeah.
Perfect. All right. So we get the lay of the land. So we kind of look and see, okay, we know we've got one thing that could potentially move the market today. Now you're aware, right? And then we move on. Tomorrow's Thursday. What comes out every Thursday? You guys should know this by now, right?
Unemployment claim?
Unemployment claims.
Okay.
That's right. So tomorrow we're gonna have the unemployment claims come out tomorrow, and we'll look at the numbers and see what happens in terms of how many new claims have come out exactly, right? So on those tabs there, you have the actual, you have the forecast, and then you have the previous. Right now we don't have the actual because that comes out tomorrow, but what they're forecasting is about 950,000 new claims versus last week where we had 1 million. So we'll now see when the report comes out tomorrow, okay, hey, where did it fall in terms of, was it accurate? Was it over? Was it below? Right? And then you can click on that little graph and it can kind of show you the previous ones of how the report has been over time, and kind of seeing that we've kind of like flatlined at that million mark, right? So then we move on. That's it. There's nothing else to worry about. If you don't know what any specific thing means, if you click on that folder, it tells you what it means, right? So if you see a red flag and you want to know what the ADP non-farm employment change was, click on the flag. It will give you a quick description of what it is, and you move on, right? Because all you want to do is just find out what impact it's going to have on the market in relation to whatever you're going to trade. Does that make sense, guys? So you don't want to spend a whole, 3 hours now researching on ADP. Not do that at other times but not when you're doing your daily routine. Your daily routine should be really focused, right? 30 to 45 minutes and you're done and you move on.
How would you recommend? So I wake up before the market opens, and I was saving this to during lunchtime. But now that you're talking, I'm wondering if I could probably do it in the morning and just pretend like it's like that night, or because it hasn't opened yet, right?
Yeah, if you're doing it in the morning before the market opens, and it's still going to be for that day, right? You're gonna be making decisions based on that day. If you're doing it in the morning before the market opens, right? If you're doing it in the evening or after the market closes, then you're doing it in preparation for the next day.
So you don't want to do it in the middle. You want to do it.
You can do it in the middle too. I mean, you can do it anytime you want to. I was just kind of giving like a preference, a little like, a note that when you're looking at the economic calendar, at whatever time you're looking at it, matters, because now you're looking at either the next day or the current day. So if you're doing it in the morning or during the market hours, then you're looking at that current day. If you're looking at it after the market is closed, well, everything that happened today is done. The market is closed, right? So nothing is going to impact the market after the market is closed in terms of what happened today, right? So now what you want to look for is for what news is coming out tomorrow that may potentially impact the market.
Cool.
Then we're always going to be looking at folders that don't have the actual data filled in, right? Because we're always looking to something that's happening later, not something that's already happened, because if it's already happened, it's already happened, right?
Right. So yeah, this is specifically for the people that are looking at it in the evening, right, for the next day, right?
Right. Or if like Jay was saying, if he's looking at it before the market opens, I mean he's still looking at stuff that actual is not filled. I mean, those folders are still there the next day, right? They're still there.
And some reports.
And we're not ever going to know the actual until after it happens. So
until after it happens, yeah. And some reports come out before the market opens. So like if you look at the ADP number that came out at 7:00 this morning. Right. So most reports come out before the market opens. Like your unemployment number will come out at 8:30. Most of the reports come out at in the morning before the market opens. When it comes to the Fed speaking and stuff like that, that stuff usually happens in the afternoon. But most reports will come out in the morning before the market opens, or right in the morning time frame. And for you guys that are in West Coast, then you're you're lucky because you wake up and all the stuff is already happening. So it's us East Coasters that are always like, oh man.
Right.
All right, so once we look at the calendar, next thing on the item is to analyze the broad markets and get a market posture. So you can go back to FinViz, and now let's take a look at, or you can go to FinViz, or you can go to Thinkorswim, it's your choice, because I want you now to look at the S&P, I want you to look at the Dow, I want you to look at the Russell, and I want you to look at small caps. We're gonna look at gold, silver, and oil.
Okay, so you want me to look at, hold on me, they have it written, but
That's okay, take your time.
okay. And
If you guys have the ticker symbols and you want to help them out, go ahead and shout it out. We're going to start with the S&P.
would you do the X one, right? Or the white one? The white one, I think is something else. No.
So we want to look at the index. So that would be SPX. There you go. Perfect.
And then-
So what happened today?
Stuck.
It went up, right? We keep making new highs. So overall, so zoom back out again. Let's get the bigger picture.
How do you zoom out?
Right on the bottom of your chart, there's a plus or minus. There you go.
More? Oh, that's
Yep,
it.
that's good. So what do you guys think in terms of the market? Has our posture changed from Monday? In
Yes.
terms of is the market up, down, or sideways?
Oh, it's up.
It's up, right? So nothing has changed in terms of what our posture was on Monday. And that's typically what happens on a day-to-day basis. The market doesn't, have these crazy whipsaws where it's like, up 1% and then down 10% and then up and down. When it starts to trend, it usually stays in that trend for a while before it corrects and reverses, right? So your posture shouldn't change that much on a day-to-day basis with the overall market, right? It might change on an individual stock, especially if a stock moves up or down because of something related to its earnings or something like that. But with the overall market, remember, this is like a huge ship, right? So it takes something, humongous to impact and turn this trend around. So your posture really isn't going to change that much day to day when you look at the overall market. So if we were bullish on Monday, when we looked at it on Monday, and when we were looking at it on Monday, it was kind of like, forming a high base. And now today it's Wednesday, 2 days later, it's higher than it was on Monday. What's your bias? It should still be the same, if not a little bit. You're continuing on that bullish momentum. Does that make sense?
Yeah.
Perfect. All right, cool. So now let's take a look at the next index, which is the Dow Jones.
So $sign DJI.
You got it.
Here. And
and what are we seeing there?
so I have the SP. So I'm sorry, but the S&P, it is SP with the spiders. I have my note that says we buy and sell this one for the EFT. But when I'm doing this thing, I only do the SPX to see where we went, right?
Yeah. So we track the SPX and we trade the ETF, which is the SPY. And you can use the SPY too if you want to use that to track. They're literally one and the same, right? It's the same thing. Like, for example, if you type SPX and then type SPY and look at it, the only thing you'll notice is just the difference in the price, right? Because the SPY is the ETF,
SPX.
it's usually about a 10% difference in what the SPX is.
Oh yeah.
The index is, right? So that's all it is. It's the same exact thing. It's measuring the same exact thing. One's just the ETF and one's the actual index.
Okay. $sign D something.
DJI.
Yeah, thanks. Okay.
So here's the Dow Jones, and remember these are the industrials, right? So same thing. You can zoom in. So if Monday was a slightly red candle, and then Tuesday was like almost identical to Monday, but today was higher than both Monday and Tuesday, are we continuing in the bullish trend?
Yes, yes.
So
So
our posture is still literally the same, if not stronger than it was on Monday. Because on Monday we were almost like, trying to break that resistance level at 2850-ish, right? We were trying to break that ceiling. If you guys remember the whole thing about support and resistance, right? Support and resistance. Here we were 3 days of trying to break that ceiling. So on Monday, if we tried and failed, and then on Tuesday we tried and failed, but on Wednesday we broke the ceiling and continued going up, isn't today a more bullish day than yesterday, Monday and Friday was?
yeah.
Yeah, so your posture is not going to change that much. We're still bullish. Nothing changes, so you just move on. Next thing, and also just for comparison, you have the DJI. Now type in DIA, which is the ETF for the Dow Jones.
It was a gnat. Sorry, I look all weird swinging my
That's
hand.
okay, and you can hit enter. Do you see how the charts are literally identical?
Yeah.
So this is what you would trade or invest in terms of if you were buying shares or buying options of it. This is what you would trade, and you can also use this to also check the markets. I'm just so used to looking at the indexes and the ETFs. So that's kind of like how I train students to look at it, but it's the same thing.
So
All
the
right.
diamonds is okay. So the SPY, the diamonds is the SPY to the Dow Jones.
No, the diamonds is the diamonds is the ETF for the Dow Jones.
But the spiders is the ETF for the S&P 500.
You got it.
Okay, that's what I meant. The next one's Nasdaq, and then that one is the Qs for the ETF.
The ETF is QQQ and the index is NDX. Nancy Dog X.
Why didn't it work? There you go.
And then just hit enter. There you go.
Look at that. It's better.
So look at that. Look at the NASDAQ. Look at her run. So if you look at the Dow Jones, right, where the Dow Jones was trying to break out of a resistance level, right, the NASDAQ keeps stair-stepping and giving us new highs every single day, right? So you guys starting to see the difference in terms of when you look at those candlesticks and you can start to see the resistance levels and the support levels of how, things just, they don't all do the same exact thing, right? The Dow Jones was trying to break out at a certain resistance level, where now with the tech sector, it's literally stair-stepping and just giving us new highs every single day. It didn't even have a red day on Monday. All right. So pretty much the NASDAQ today was unchanged, right? It opened high. It got to the high level of 12,499. It went low. It got that wick. If you guys know how to read the candlesticks, right? It went all the way down to 1,200, and then came back and just and closed where it opened.
It's this one. Yeah, this is today.
Yep. So you had all that movement in and out all day long, but then it ended up closing exactly where it opened.
10, 11, 12, 13, 15.
So that's the time frame, right? So that's this morning at the open, and then today at when it closed at 5, right?
Oh, back here. Why is it gray here?
So the gray area is the after hours, right? Because the market closes at 4.
Oh, that's right. You said that.
Right. So the gray area is going to be is now after hours. So now what Jay just did is break down the NASDAQ, what we call intraday, right? Now we're not looking at a daily candlestick, we're looking at our intraday candlestick, and we're looking at how many minutes are we looking at? Was that 15?
This 1 hour.
You did 1 hour. Okay, so we're looking at 1 hour. So you can go down and look at 15. You can look down at 5. So you're just breaking it down intraday, right? So zoom back out and let's kind of like, tell the story of what happened with the Dow today. So the Dow actually, from where it closed yesterday, you're good right there, Jay. From where it closed yesterday, put your cursor where it closed yesterday, perfect, to where it opened today. We had a gap. That's what you call a gap. It gapped open, right? And the moment it gapped open, it immediately sold off, right? So it opened, and then we had a sell-off right back to where? A known support level, which was yesterday's support level. It found support there and started to inch back up again, right? And failed to continue in that trend, right? And then it kind of fell right back down, right? So it came back down once again.
I'm doing it. And wait, I'm
There
sorry.
you go. You see how you're doing this, right? Back to that same support, like that same zone of support, right? It did go a little bit below that previous support level, right? So it did give us a lower low, but it found strength at some point in middle of the day and continued up and cleared. So if you were looking to trade this, right, you would have waited to make sure that it's intraday. If you were day trading this, right, you could have traded it down, shorted it as it was going down, and then turned around and played it up as it started to change its direction again and start to go back up again, right? So a day trader takes advantage of the movement that's happening intraday, and they can play it both sides, up or down. Sounds good?
Yep.
Awesome. All right, let's take a look at the Russell. Oh, and then the ETF for the Dow Jones is the QQQ. So if you want to just type it in and just compare it, and then go back to a daily candlestick. Change your time frame to daily. There you go. So you guys kind of see how the QQQ is literally identical to the NASDAQ, right? Same trend, same pattern, same everything. And then the last one is going to be your small caps, which is the Russell. So RUT.
Why isn't it working? Okay. So it's like this. I'll zoom in. Maybe.
That's the Russell. So what I want you to do for me, Jay, is zoom in for like the last month. Give me just more than 3 days. Give me like the last month. There you go.
Go away.
So just release it. That's okay. Just double click anywhere. There you go. And then now zoom in again and give me like the last, like from right there. That's fine. Okay. So the Russell 2000, unlike the Dow Jones and unlike the S&P and unlike the NASDAQ, the Russell has been trending sideways, right? Where everything else has been going up, right? And now that we have, and the Russell 2000, remember, is going to be your small cap companies, right? Your small to mid cap companies. So it's been sideways for quite some time, trying to break out of that resistance level. So Jay, I want you to kind of show the class where you think that resistance level is. Just looking, like, show me where the ceiling might be on the Russell.
Here.
Right. So that it's a zone. Remember, it's an area. So some people will include the wicks of the candle. Some people will try to touch as many candlesticks as possible. Right. It's a zone. It's not a specific number. Right. So that could it's pretty much literally anywhere from there to that wick that you just highlighted. Right. That's the zone. So the Russell we're looking for the Russell to break that zone. Right. And yesterday's candle and today's candle is showing strength that it's trying to do what? That it's trying to break out. So now go back big picture. And now you guys can see that, right? How it's trying to break that ceiling. And once it breaks that ceiling, it's fly zone, right? Because the next resistance level will be right there at 1715. So once it breaks out, they tend to continue in that momentum once they break out. So the Russell 2000 is really looking up for a good setup for a breakout to the upside if it breaks that ceiling. And then the ETF for that is going to be IWM.
And you said that for it to break out, like it's really like all the investors that control this. Kind of.
Well, a breakout just it's just what a breakout means is just money is moving to that sector or that stock, right? It's what you would call institutional, like, money just moving into into that sector, into that area, right? You, me, and everybody in this class combined, we can all pull our money together and go buy shares of IWM, and we would not move it, not one candlestick, right? So when you see money moving into different sectors, it's what we call institutional intent, which means that money is moving from one place to another, one area from another, right? So this breakout could mean that, hey, maybe some money is coming out of tech, and it's now some, people are coming back to the small caps, because the small businesses were the ones that were mainly affected with the virus. And now that we're in this reopening phase and all these things are happening, these companies will start to do better now that they're back in business, or whatever the case might be, right? So now you might see people now moving into this area, because it's been the one that's been lagging, right? It's been left behind when you compare to the other three. This one's been the one that's been lacking. So now people might be looking and saying, okay, let's give the Russell 2000 some love. But it's not anything that I'm doing or anything that we're doing here in this chat. It's what the institutions are doing in Wall Street, right? So pretty much Wall Street plays its card and shows us exactly what they're doing, and we are what we're considered to be like the little retail traders. We're like the little fish, just following the big whales, right? We can't move the market. We just follow what the market is doing.
Cool. I don't know if this is a discussion for later, but several times, like, so when we talk about like Wall Street or the bigger people, so besides the news and the media and the businesses, like stuff happening to them that will affect how things go up and down, how does, like, who's like Wall Street, or like how?
Okay, that's a good one. And yeah, maybe I'll do a session and kind of explain the market and like what moves the market and hedge. So when I say institutional intent, think like hedge funds, right? Think those big firms. Think your investment banks, right? Your Goldman Sachs, all those big institutional companies, right? Those are the ones that are managing people's money, right? We are what we call retail traders. We are retail traders. We don't have other people managing our money. We trade our own money, right? But there are other companies and people out there that manage other people's money, right? They're money managers. So they're always moving, in and out, all these big brokerage firms, right? Like your TD Ameritrades and your, all these people, they manage other people's money, right? Your 401ks, the pensions, all that stuff is managed by these institutions. And that's what's moving, the market, because it's a huge amount of money coming in and out of different areas. But I think we can probably make a segment for that and kind of explain all that stuff and who market makers are and how the trades are processed and how your orders are filled. I think that would be a good discussion to have another time.
And so basically they're just us on a bigger scale. They've got more of us on a bigger scale.
Yep. They're the big fish, they're the whale, and we're the little fish just following the big whale.
Because their dollar amounts equal more than what we're doing, then they have a bigger effect on the bigger picture.
Yep. So just to kind of give you an example, right? Click on the trade tab, Jay, there for me. And today alone, right, if you look at volume right there, how many shares of IWM traded today? 16 million, right? What's 16 million multiplied by the price point of $158?
Let me get my calculator.
Right, that just shows you how much money, right? Because this is volume in terms of shares, right? So how much money moved in this ETF today?
Chingos amount of money. 15796, you said?
Yeah.
A lot. It says 2.647954 exponent or.
I didn't even think your calculator. I thought it was just going to give you an E. Like there's too many numbers for me to even figure this out.
Oh, it's back.
Whatever that is. I don't even know if it's billion or trillion, but it's a lot,
exactly.
Right?
It's a
we
lot.
Don't have again. All of us here combined, and we can even go get grandma's money and my dad's money and everybody else's money. We would not be able to. We could not even create a wick in a candlestick, right? We are irrelevant to the market, which is what gives us the advantage. Is that nobody cares about us, right? We're the little people. Nobody cares. So when the news is coming out about all these hedge funds and Warren Buffett bought this and Michael Jordan is now in DraftKings and all these things, that's what's moving the market. We're not doing anything. We just take that news and run with it, right? So it's actually a benefit to us that we are irrelevant to the market because they could care less what we do. You know what the cool part?
Got it.
There you go. All
Took a
right.
while.
So
I got it. Took a bit.
huh?
It took a bit, but I got it.
So guys, give Jay a huge round of applause for helping us do our daily routine today.
Yay! How do I close? Stop share. Okay.
Yep, you did very well. Does anybody have any questions in terms of what we just went over? Was that helpful watching him do it on a slower scale?
Yes.
Yeah.
All right, good. So I think what Jay just did, and you guys don't know this, moving forward, I'm gonna just pick on
Nice.
individuals.
My bad.
Well, you know, it's participation, right? This is how we get engaged, right? And start to participate. So don't let that scare you off and they don't show up to class on Wednesday next week, guys. But I'm gonna pick on somebody so that they can do the daily routine for us. Because I think the more application and practice you get, the more this stuff will start to make sense, right?
Yeah, actually, that helped out a whole lot.
And if she picks you and you didn't do the homework,
I'll walk you through it. Well, I'm here. Like, I'm not gonna just let you sit there and sweat and bullets and stuff like that. And your classmates are here to help you out too. Like, this is not like, you know, just kind of watch them there and make fun of whoever's gonna be showing it. If you
that's right.
know,
There's
if
no
you know
nuns
the
with-
answer,
there's no nuns with rulers.
say it. If you know the answer, shout it out. Right? Don't leave your fellow classmate hanging. This is not it's not a graded class, so there's no like, you know, favorite student or whatever. There's no passing grade at the end of the class. You don't have to show off. Just help each other out, right? All right, so we were talking about those retracements last week, and I kind of gave you guys that homework to find those retracements. Another pattern I want to show you guys today is what we call a high base breakout. Okay, now a breakout is much more easier to trade than the bullish retracement, but the bullish retracement is much more easier to identify than the high base, if that makes sense. And this is what I'm trying to get to. Let me share my screen and you guys can see that. Let me get rid of that. Can you guys see my Thinkorswim?
Yep.
Okay. So what I mean by a bullish breakout, right, or a bullish retracement is that it's easy for you to identify those higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. It's harder for you to identify where the support is starting to form so that you can now take advantage and be able to trade it when it's going up, right? So if we were looking at this hindsight and we're saying, okay, I'm looking to get into a trade on the Dow Jones. Let's actually do DIA because that's what we would actually be trading, not the actual index, right? So if we were looking at this and we're going, all right, well, here's a nice little uptrend, and let me get my little drawing tool and hopefully I can draw today. So if we're looking at this and we're going, well, here's a really nice trend where we've got this going, right? Higher highs, higher lows, higher highs, higher lows, right? So if I did not have, and this is where this is going to get funky because I have to do this. If we were looking at this yesterday, right? The hardest part would have been trying to figure out whether yesterday's candle was the actual support, because we don't know what tomorrow is going to bring, right? So we're looking at this and we're like, okay, higher high, higher low, up, reversal, right? Ups, down, up, down, up. Now, is this support? We don't know yet because we only have 2 data points, right? So trying to figure out whether this is the right entry point is the hardest part because you don't know whether it's done, whether this is where the support level forms, right? You only know it's support until it starts to go it stops going down, right? And with these candlesticks here, where you have this retracement here It found support, you got a confirmation candle, and then you got another confirmation candle there. So now hindsight, you can see the entry. So with a retracement, it's sometimes harder to trade it in terms of where do I find my entry versus a breakout. But it's easier to identify when you're looking at the charts, right? So you can see that bullish uptrend because it's sitting in a channel. If we look at, QQQ, right? Look at that. You can identify that, yes, this is a bullish uptrend. It's just higher highs, higher lows, higher highs, higher. So it's easier for you to identify this trend and this pattern than it is to trade it, because you're trying to figure out, okay, well, where's the floor now? It's had 3 days of going down. Is this the last day? Right? So then you wait for that confirmation candle so that you can then trigger to get in to now ride the momentum back up. So the high base breakout is what you're looking for with the high base breakout, is if it's continuing in this uptrend, but rather than it pulling back down, is it going to consolidate sideways for a few days and then break out, right? So for example, let me see if here's an example, right? So we've got ADNT. Don't even know who they are, what they do. I don't care, right? All I'm looking for is for the pattern. So you've got this. It had this trend of going up. It had a little bit of a sell-off here. It's now been sitting sideways for literally a month, and we're looking to see if it's going to give us this breakout here, because once it gives us this breakout here, right, it has a potential to run because now it's got strength in that breakout. You guys see that? So this is usually easier to trade in terms of where do I find an entry. The entry is going to be when it breaks out of this ceiling, because we're looking at this ceiling as your resistance level. If I look at this one right here, AES, same kind of thing, right? It's in a bullish trend, but the pattern that we're seeing is not that retracement like we did with the diamonds, or even here in this example here where it had a retracement. It was going up, it retraced, and then it broke out. Now we're not getting that. We're getting a consolidation, or what we call a stock in a box, where it's just channeling here, trying to break out of this ceiling. So this breakout is a lot easier to trade, because really all you're looking for is for it to go above that resistance level. Does that make sense, guys?
Yes.
So those two trends, they, the bullish breakout, the bullish breakout, and the high base breakout and the bullish retracement are going to be the two most common patterns that you're going to start with in terms of finding them and starting to trade them than any other. There are other ones that I don't want to get into right now, because I don't want to confuse and add on more to them. But as we start to get into paper trading and practicing, we'll look at them, and I'll give you guys some links tonight to go watch some videos on the other types of breakouts, because we don't have class on Monday because Monday is Labor Day. So at least this will give you guys some things to look at so that you don't lose the momentum that you've had these last few weeks. You can go watch some videos. But this is what I mean by breakouts. When you see a stock just kind of sitting sideways, just trying to break out, right? The question I have for you guys is, do you sit here and look at this every single day waiting for this to happen, or do you think there's an easier way for you to catch this so you don't miss it? Because by this point, have we missed this trade? Yes or no?
Maybe, we don't know yet.
We've missed it because this was the ceiling right here.
Oh.
Right? If we're looking for this as a potential trade, kind of like how we were doing that setup with the pullback, when we were looking at, okay, it's giving us higher highs and higher lows, higher highs, higher lows, and then we were trying to find support and then figure out where your entry, your stop loss, and your target was, right? This one here, our entry is going to be based not on a pullback where we're looking for support and waiting for that confirmation candle. Our entry with the breakout is if it breaks the ceiling, right? So even with this example here with ALB, we can look at both trends and identify them. So here we can say, all right, here is your bullish retracement. Here's your wave one, your range one, pullback, range two, pullback, right? You guys see how this range, the momentum for here was higher than this one here?
Yes. Yes.
So this one here, if we were looking for a pullback, then you would have been looking for a pullback to then be able to figure out where your support is and then wait for that trigger candle to then write it back up again, right? So here's your 1, 2 pullback. So now it's giving us, so it's still in an overall uptrend, but now we're not getting that repeatable pattern of a breakout, of a pullback or a retracement. We're getting a different setup. We're getting what we call a high base breakout. So stocks are not always going to give you that same identical pattern every single time you're trading it, right? They're patterns within patterns. It's an overall bullish uptrend. But now here we are high basing, because it's almost trying to like decide, what am I doing? Am I going to take a breather, relax, what, right? We don't know yet. So now this breakout here, this resistance level here is what we're looking at as our potential entry if it breaks above it, right? So with the stock like this, if you had this on your watch list, my question for you guys is, do you think, or let's just use me as an example. If I had ALB on my watch list, right? Saying, okay, I want to trade ALB when it breaks above this resistance level, and let's call that 93.48. We can just call it 90. We can just call it 94 just to make the math easy, right? We can say if it breaks above 94, that's when I'm gonna buy, because it's giving me that strength, right? Do you think that I come in here and check ALB every single day to see if it's doing that, or do you think that there's another way that I can be notified by the software that it's at $94?
Ooh, opposite of stop loss.
Opposite of a stop loss.
Stop gain. Go gain.
Nope, it's not. It has nothing to do with an order entry. You guys have phones, right? And you
the
have
stock
apps,
ticker.
you have all kinds of different apps on your phones, and some apps like will notify you when something is happening, right? Like when you get a text message, it notifies you that you have a text message, or if you have your health app, when it says it's time for you to, make your 10,000 steps today or whatever time. Like you guys get all these little dings that happen on your phone throughout the day, right? Well, guess what? We have the same thing, or that you have the ability to create notifications using your platform to let you know when certain stocks do certain things, right? So that you don't have to be sitting here all day long waiting for, how many days was this? From August 11th to September, yesterday was the August 31st. It broke out yesterday. You don't want to have to waste, 2 weeks just checking this stock to see if it's breaking out. You just want to be notified when it does, right? So inside Thinkorswim, there's a little thing called an alert, okay? And all you need to do is on your chart, wherever you want to place that alert. So if I wanted to be notified when ALB got above $94, all I would do is put my cursor right around $94. It doesn't have to be the exact price, but right at 94. And all I do is right click. If you're using Windows, I don't know what you do when you're using a Mac, whatever your right click is on a Mac, you do that. And down here, do you guys see where it says create alert?
Yeah.
So I would click that, and you can now change it to the exact number that you want it to be. If you want it to be 94 exactly, you can change the number to 94, and then you would specify what you want, right? I want to be alerted when ALB is at or above $94, because that's my trigger, right? That's my entry. That's where I want to get into this trade. And I can do create. Okay. And now it puts that on here. And when it breaks above $94, if I have my computer open and I have this platform open, there's a little bell or a little ding that goes off that tells me, hey, something's happening. So, and it will tell me A or B is above 94. Okay. So if I'm sitting in the computer now can I go in here and place a trade and say, all right, I wanted to buy, it was above 94, and now take, put the order in, and now I'm in the trade and I can take advantage of this move and this move today.
Cool.
That's better, right? Now I'll take even a step further. Well, what if you're not sitting in front of a computer? How do you get the alert? Well, Thinkorswim has this cute little thing up here called Setup. And in Setup, if you go to your application settings, you can go to where it says My Profile. Is it My Profile? Let me think, not My Profile. Notifications, sorry about that. Okay. And you can now actually put an email address and have it send you an email when it does go above 94. Pretty cool, isn't it? In your live account, if you're doing this in your live account, you can actually put in your phone number and it will send you a text message when it goes above 94. And or if you have the Thinkorswim app downloaded to your phone, the app itself will notify you when it goes above 94. So even though we put this in using this desktop platform, they're linked together so that now if it does go above 94, if I'm not sitting in front of my computer and I don't hear the ding, I will get the alert on my phone, either through a text message or through the app itself, because the app itself will send me a notification so that I don't miss the trade.
Very cool.
Very, very cool, isn't it?
Hey, can I ask a question?
Sure.
So if you see like right there in yellow, it's highlighted ATR. How do I get that to show on mine? Because mine doesn't show the ATR.
So this is a this is a code that I was given by my mentor, which I can share with you guys if you want to use this as your ATR. If you want to use this, that's fine. If you want to add it to your studies at the bottom here, where I have the volume and everything else, you can also go to studies and you can just go to add study. And when you add study, you can go to all studies. Actually, no, hold on. Let's do this again. Studies. You can go edit studies. And then you can either type ATR up here in the search box, but because it's the first one on the alphabet, it will just show up there. So you can just do ATR, double click it, and it will add ATR here. If you hit apply and say, okay, now your ATR is here.
That's what Jay.
But if you want this one, I can send you this one too as well. So let me give you both. So let me go to settings and I'm going to actually share. So now let's go to tools and shared items. How you paste this on your end. Let's go all. Where did it go? Where'd it go? Where'd it go? Where'd it go? Let's try that again. Charts. Share. No, don't open it there. I wanted to open in Thinkorswim so you guys can just go get it. Let's close that. And now let's go to tools. Why aren't you popping up here? Well, maybe I need to go to, hold on, all time, date range. Oh, wait a minute. I'm trying to remember how to do this. It's been a while since I've had to share something. Share workspace. I think that's what I had to do. Come on. Why isn't it coming up? Shared items, all items. Let's see. Chart IV rank. Oh, wait a minute. I already have it here. So I think this is the one. Yep. Okay. So it's already here. So let's go to tools. So now if I copy this and I come here to our chat, I'm going to paste it. So now what you guys would need to do is just copy that link. And then when you go to your Thinkorswim platform, I'm gonna go really slow so everybody can catch it. But then if you want to watch the replay to do it again, you certainly can. Once you copy the link and you go to your Thinkorswim, you're gonna go to Setup up here. And you're going to click on Open Shared Item. And then you're going to paste it here.
Cool.
Click Preview. And then Import. And you can save it, whatever you want to name it or whatever. So once it imports and you open it up, make sure you go to your studies and then save this study set and then call it whatever you want to call it. So if you want to call it ATR top left or whatever you want to call this study, you'll have it. And now it will always be there.
Thank you.
So whenever you go to your studies and because you can have multiple, like if you want to have a clean chart and you don't want any indicators on it, you can say, okay, I just want a clean chart, and then you can save that or whatever, however you want to have your different, studies. If you want to have moving averages of a certain, maybe just the 9 or whatever the case might be, you can have all those different ones. Was that helpful for you?
What did she label it? What should we label it?
You can call it whatever you want to call it, because she was asking about the ATR being on the top, so I just called it ATR top left. But you can name it whatever you want to name it. But you obviously want to name it like, whatever you're using that chart for. So if it's a moving average chart, you would call it, moving average or whatever you want to call it. If it's a clean chart with nothing on it, you would call it a clean chart, right? So for example, here, oh, come on. Why is this? I hate when I'm using this platform after hours, because sometimes it just gets a little bit funky. And it doesn't want to help me. It doesn't want me to use my shortcuts. So if I go to studies and I go load, I can use, that's my top left. That's the one that we named. If I want something that has probability cones, then that's another study. And I'm not going to explain what those things are right now. It's just, you can, have different chart setups so that whatever you use, whatever indicator you're using, you don't have a whole bunch of them in the chart that makes it messy. So if you're just using one indicator for one thing, that's fine. If you're using one for another, that's fine.
Like algebra.
I know.
Calculator. How did I use it in real life?
We're not getting into that today. What we're talking about today is breakouts. So, so I have a list already that I kind of found either through my own personal watch list or whatever, but I kind of want to show you guys just kind of what a breakout looks like. And it can be a breakout from either, when a stock makes an all-time high, or it could be a breakout from a reversal, right? But what we're looking for is this high base breakout. Let me put a clean chart. I need a clean chart. Let's go. Let's go remove all studies. That's what I want. I want a clean chart. So, you know, so we're looking for a breakout to see if it's going to break above this price level here. So a lot of the times when you're trading, it's usually just you being patient and waiting, right? Trading sometimes is just going to be a waiting game. Just wait for it to break out and then boom, you're in. Here's AES. So has this one broken out yet? Based on my little drawing, has this one broken out yet? If this is our resistance level right here, has it broken out yet? So is this a potential candidate that we could actually prep a trade and be triggered in when it breaks out? What do you guys think?
I think so. The little top of the candlestick is almost over it.
Yep. So this is your if this is your resistance level right here, and this is what we're going to call our support level right there, right? This is what we're looking for. So it had a huge run up. Now it's kind of slowing down, right? Just catching its breath. If you think of it like it was running, right? It had a huge run. Now it's kind of sitting here sideways, channeling, waiting for it to start another run. If you know, run up again, right? So, but we want to get the confirmation. You don't want to be the first one to jump the gun, right? You always want to wait for confirmation that it actually is going in that direction. Because what if we got in the trade prematurely, and then tomorrow it goes down, right? Now, if you have a stop loss, you'll be taken out, but you want confirmation that it's going in the direction that you want it to go. And because this pattern that we're trading is a breakout, it has to break out first in order for you to get into the trade. Here's another one in ALB. Now this one, did we look at this already? Yeah, we looked at this one already. So this one we missed, right? This one we missed, and that's the one we put the alert on to be notified had we had the alert on. AMD was another one that broke out a few days ago. So here was the run up here, stayed sideways for a while, and we had the breakout when it broke above that 87 price level right there. So this is something that we missed a few days ago. That would have been your entry right there, right? So now what we're gonna do is, again, wait for it to either consolidate sideways and then have another potential breakout. But I just want to show you guys this pattern. Don't worry about what it's done afterwards. I just kind of want to show you guys this breakout pattern on what we're looking for entry levels. So here's a good one that we could have gotten triggered today. This is AME. Here's your resistance level. So once again, support, resistance, right? You want to identify those levels first. So if this is what we've identified as our resistance level, why? Because it's tried to hit that, to break that ceiling multiple times, right? It tried here, failed, came back down, found a floor, jumped back up again, failed, came back down, not even quite to that floor. And then today, boom, it's up. You guys see that?
Mm-hmm. Yep.
So the entry for this, for a breakout like this is always going to be above the resistance level. And we'll talk about the rules of where you enter and all that stuff, kind of like how we did with the set method, right? The E, the T, and the S. But I just want you guys to train your eyes to see this. We're going to start getting into now how we actually enter trades into Thinkorswim next week, how to actually put the trades on. But I want you guys to just, again, train your eyes to be able to scan for these types of patterns and then identify them when you see them in the chart, right? So that's kind of like the process we're going through. Here it was again here. If we go prior to the breakout here, here's another channel where it was consolidating, right? Consolidation, and then it broke out, boom. And then when it broke out, it had a run. And now here we are again, consolidation, waiting, boom, right? So today would have been the entry for this trade right here. So once again, if this was something that was on my watch list, I would have had an alert to let me know when it got above that 102-ish price range, okay? APH. Similar thing, right? Bullish all the way, a little bit of sideways consolidation here. We've got a W formation, breakout, again, high base here, breakout, and here we are, breakout again. So they're not always gonna be clean, and you're not always gonna get 2 or 3 days before it breaks out. Sometimes it could be, a trending sideways for quite some time. But I want you guys to notice why it's easier to trade a breakout than it is the retracement, because once they tend to break out, they move, right? If you guys are noticing anything with all these different breakouts, is that when they go, right? When they move, they move. So the breakouts are stronger. They have the strength in that is more, because it's either creating an all-time high, or if it's either creating an all-time high and you see the volume increasing and money is coming in because the stock is creating all-time highs, there's more strength in it, and you can see how it moves really a lot when it actually has that breakout. Which one did we look at? Did we look at CERN? That was one that we looked at. CDH, here's another breakout. So I'm giving you guys a little bit of my list here, but I want to show you guys how you guys can scan again for the same exact thing. And this is what I want you guys to do for homework. And I'm also going to give you guys some videos to watch. Same thing here. Here's that high base is just waiting. It tried here and failed, right? And this is why we wait for the confirmation, because had you looked at this prior, let's go and just do this, right? Had you looked at this and go, okay, ooh, nice, nice uptrend, high, pullback, retracement, and then here we are, we're just high basing, and you said, okay, I'm gonna get in without confirmation that it's going up, and then this happens, right? So you waited, you have to wait for the confirmation, because sometimes it can be a failed breakout. So you could have looked at it and said, okay, I'm gonna get in on here, because it touched it twice. It didn't give you confirmation that it broke above this wick right here, and then you saw that downtrend. So you have to wait for that confirmation that it's actually going to break. Here's another attempt here. It tried to break that ceiling, failed. Tried, successful. You guys see that? So you have to wait for that confirmation for it to break out. FTV, this one is setting up to break. You guys can see that it's kind of hitting its head here, hitting here. So we're waiting for it to break above there in that range. So you could actually put an alert for this one to break out. So we'll review this next week on Wednesday. Let's put an alert above 75, and then we'll come back and actually look at it next week. And then, and if you want to put notes, you can put notes, like if you want to call this, high base breakout, whatever, buy at 75, whatever you want to, whatever notes you want to put on here as a reminder to why you are looking at this stock. When it sends you the alert, it will have that on there, right? So now you'll know, okay, this is why I was looking at it, because it was, doing this or whatever. IWM I have on the list, and that's one of the indicators we looked at today. Look at IWM, right? It's been sitting here waiting. So there, a trigger above 160 would be a good entry point. Same thing, KAR. So this was on an uptrend, and then we had the whole virus thing, and then it came down, and then it's been inching to go up, and it's been going up, and now here we are ranging, and now we're potentially going to break out here. And once we break out here, the next resistance level really is going to be right around this area right here. And then Monster, Jake gave me, this was Jake's freebie. He gave me this one today. So Monster, here we were just kind of like, again, high basing, boom. Today we broke. You guys see that? So this is what I want you guys to just look for in terms of that. So let's quickly jump into FinViz, and I will show you guys how to scan for that. Because you can actually, tell me if you guys see my
Bob Marley.
my screener there, my Bob Marley that my daughter put on there that I can't figure out how to fix or anything or change it. So, all right, so I've already gotten some criteria on here. So if you guys want to screenshot this, you can. We're going to go start with the descriptive first. So descriptive is the same, mid over 2 billion, mid plus. Volume, I have over 1 million. Optionable, shortable, and over $10. So that's your descriptive tab. I have nothing on fundamentals. And then my technicals, I have the price above the 20, price above the 50, price above the 200, And now I have a pattern that I'm specifically looking for. Okay, and what I'm looking for is for a pattern that's I want to capture stocks that are in an uptrend, right? And they're in a channel. So I'm not getting into pattern descriptions, and I'm telling it, find me stocks that are in a channel. And you guys can kind of see those channels that are drawn here in Finviz, right? I want something that's in a channel. So now when I do that, I have 88 different companies, okay? Well, I might say, I don't want to go through 88 different companies. That's a lot for me. You can start now to go and start to filter it. Because you're looking for a high base breakout, you want something that's relatively close to making a high, right? So if I click on new high, that means I've potentially missed it because it made a new high. So I want something that's getting close to making a high. So I can say, give me something that's, 5% below a high, or give me something that's 0 to 3% below the high. Because what it's telling me is that it hasn't broken out yet. It's about to, it's close to, and that's what I'm looking for, because I'm looking for an entry. I'm looking for a stock that is going up, but really hasn't broken out of that high base channel quite yet. Okay, so now I'm down to 18 companies. So now that's easier for me to go through and find something, right? Not everything is gonna pan out, but at least now I have something, okay? And now I can go to the tickers and I can highlight them. And I can go to my Finviz, copy them, and then go to Thinkorswim and paste them, and then quickly go through them. So if I go to watch list, I can now create a watch list, and I can name this my high base breakout, or whatever you want to call this watch list, right? And then save them, high base breakout, if I can spell. And then now we're going to import them. And all I'm going to do is just click on paste symbols from clipboard and then say okay. And then save it. And boom, now we have our high base breakouts, okay? And now all I have to do is just go through and check to see whether it's broken out or not. And just go through my list, right? So there's, I think we said 18, and it's just a matter of going through and finding, is there one that has a good setup? And if you don't see it, move on from it. And I know I'm going fast, right? So there we go again. You guys tell me, out of everything that I click, if you see one that you like, write it down, and then we'll go back and look at it. Whatever you're seeing as a potential breakout, right? Remember, it's a breakout. ETN, we missed that one. That would have been a nice one today, but we missed it. Ooh, I like this one. Somebody write that down. FBHS. That one's kind of run. KNX. Not the prettiest one I've ever seen. Missed that one. Missed it today. Lowe's. Ooh, who does not know what Lowe's is? Who Lowe's is, right? Lowe's is like our Home Depot. Had an all-time high here at 171. It's attempting to break that again. So I'm going to put Lowe's on the list. So somebody write down Lowe's. I don't even know what that is. This could be a buyout. Whenever you see stocks do this, so take a look at this. So here's this company, whoever this is, Momenta Pharmaceuticals. And by the way, we do not do drugs, even when it comes to trade. We don't trade pharmaceutical companies because of this. That's a true statement. This company, the last, back here in August, it was trading at 30. Whatever news came out, it's probably a buyout or something. It gapped at 52. And that's where it's been ever since. So when you see something like this, right, stay away from it. just completely stay away from it because you cannot even explain what this is, and unless I go and dig in the news and find out exactly what it was. But when you see something like this and something that's a gapper, you do not want to be a part of that, right? And this is a pharmaceutical company. We don't even trade pharmaceutical companies at this point because of this. They have multiple gapping personalities is what we call them. So that's out. That one's out. We've got 2 candidates that we found already that are pretty much good. We've missed on that one. Tell, missed it. WY, right there, right? Have not missed it. So put that on the list. And XL and K is out. So which 3 did we have? I think we found 3.
FBHS, LOWY, WY.
FBHS.
KNX was something too. I forgot what we liked about that.
Which one? KNX?
Yeah.
All right, so let's go back and look at them individually. KNX. Yeah, kind of like it's not high basing in the direction that I want it. I want to kind of see it high basing up here more than it is. It's high basing to like the downside, but I don't mind it, but they are prettier ones, right? So, and I'm trying to teach you guys to just find those clean setups.
Okay, take that off.
Which one did we say? We said lows for sure.
Yeah. And then the FBHS and then the WY.
FBHS, yes. And then WY. Okay, so do you guys see how you can literally like just, you know, condense your search time frame just by doing a couple of things? And or if you even want to go down to like, let's go back to FinViz and say, all right, when you do, and we forgot to do the heat map when we were doing our daily routine, Jay, that's my bad. But when you come to your screener here and you're looking for potential candidates, right? This was what happened today in the market. Was the market bullish or bearish today?
Bullish.
Bullish, right? With the exception of a couple of sell-offs in Apple and AMD and CRM. Netflix had like a flat day. And then the one sector that you can see was, you know, oil and gas had a red day. The entire sector did. And energy was kind of neutral. Everything else was potentially green, right? So you could have been looking for just breakouts that were happening in technology, right? Or communication services or consumer cyclicals or whatever. So you can start to filter your screener with the different, with the descriptive here. You can now say, okay, give me the technology sector or give me the healthcare sector. You can even break it down to, you know, sector industries within the sector. So if you want technology, you can go, you know, give me things that are in computer hardware or give me semiconductors, right? So you can get those AMDs and whatever, right? You can go there and say, give me the companies that broke out in this sector and so on and so forth. So as you get comfortable with the screener, you can start to break it down to different sectors and different industries, you know, and so on and so forth. But just always remember the must-haves is it's gotta have volume over a million. 500 is okay, but I prefer over $1 million for me, but I'm okay with 500,000. The price, the optionable, shortable, and so on and so forth. Okay. And then go from there. So what I have for you for homework before I let you go, let me stop share. Your homework is I'm going to put a couple of links here in the chat. So you can go watch these videos. Now you have to promise me something first before I share these links.
What?
You cannot go down a rabbit hole. Okay, I'm sending you to YouTube, but I'm sending you to a specific page, right? And the page I'm sending you to is the community that I belong to, which is Tackle Trading, okay? So I want you guys to just watch the videos that I send you. If you decide to go down the rabbit hole and watch more videos that are in there and you come back with questions on Wednesdays about what's an option and what's this and what's that, I'm not gonna answer them because we're not there yet, okay? But if you just have time to kill and you want to watch more videos there, feel free to do so. But the only questions I want on Wednesday, when we come back to session, are the questions from these videos that I sent you, and they're really quick, 5-minute, 10-minute videos, so they won't take up much of your time. But again, it's to kind of give you guys, the ideas and how we qualify these breakouts and the retracements, okay? Because that's the subject that we are on. Next week, we're going to get into order entry, how to put the actual order in. So keep practicing how to scan for these stocks. There's 2 more links I need to put here. Give me a second.
Can you put on there how we can contact you too? I couldn't find it on Investor Party.
I sure can. Easiest way to contact me and is going to be, hold on, let me go chat. Where are you? Here. There's a second video. And then there's 2 more coming. I have now downloaded the Investor app on my phone. I just had it on my computer, so I've missed a couple of messages from there, but I now have it on my phone. So now if you send me a message through Investor Party, I will get it on my phone. So I'll be able to respond through there. So if that's easier for you to do that there. Copy. Or if you just want to find me on whatever social media platform you use, whether it's Facebook or Instagram or whatever, you can send me a message there. And my cell, I'm going to put it there, 8312. There you go. Shoot me a text if you want to. I will not have your number saved, so identify yourself. Send me a message. Otherwise, I will ignore, because I get quite a bit of text messages, especially with the Maryland Healthcare Department looking for making sure I'm staying in my house. So I'm getting all kinds of phone calls from people like, hey, we're just making sure that, you're social distancing and da-da-da-da-da. So pretty much my information is now out there to the entire world. Yeah, crazy, isn't it?
Yeah.
You catch COVID and now you have everybody tracking you.
Are you still sick?
They cleared me. They cleared me on Monday in terms of I don't have fevers, and I don't have the symptoms like coughing or whatever. So they've kind of sort of like told me I'm good to get out of isolation, but I just want to give it a few more days before just to make sure. Because they said it can stay in the system for like 6 to 8 weeks. So I don't want to take any chances and give it to anybody else. So I'm still staying indoors.
Nice.
So yeah, there you guys go.
Glad you're feeling better.
Yeah, I'm good. I mean, it was crazy because I really did think it was a cold. Like I really would have just treated it I really was treating it like a cold. And it wasn't until my sister got sick that I was like, okay, maybe we need to go get ourselves checked. And then when I lost like my sense of taste and smell, I was like, well, this is unusual. I've never had that before. And I know that was one of the things that they said that, you will have is you won't be able to smell anything or taste anything. So
yeah,
that's when I was like, I need to go get checked, because I was making like a real strong like mix of like ginger and lemon, and I wasn't tasting any of that stuff. And I was like, this is disgusting, and I'm not tasting it, so something's got to be wrong.
Yeah. Well, that's one way to get good food in your body, lose your sense of taste, and then
Yeah, that and they said, like the doctor said that was one of like the last symptoms, like one of the last symptoms of the virus is that when you get to the point of where you're not tasting or smelling anything like you were to what down that lingers the most, like the nose sense of smell and taste and coughing lingers the most. So I had like this horrible week of like, I'm hungry, I want to eat, but I can't taste anything. So it's like, this sucks. I can't smell anything. Like it was soup, nothing. Like my sister made me like a soup that had all these different spices in it. Nothing. But yeah, so I'm past all that, so I am feeling a lot better. But yeah, I really did think it was a cold the first like 3 or 4 days, because I was just like, all right, well, I'm feeling feverish. I'll just take NyQuil and go to bed and sort it out.
Right.
So, yeah.
I have a question about funding.
Sure.
I have a Roth IRA account.
Okay.
And can I pull that into the TD Ameritrade and use those funds to trade within?
Yes, ma'am. So what I would suggest that you do is, I'm assuming that Roth is somewhere else.
Yes.
Okay. So here's what you do. Think of, so if you decide that you want to use Thinkorswim as your new broker for either an old IRA or Roth or whatever, and you have money sitting elsewhere, call up TD Ameritrade and tell them that you have a Roth sitting here, wherever it's at, and you want them to go get it, because you're pretty much breaking up with the other broker, right? So if you call the other broker and tell them you want to move your money, they're going to, tell you all these different things about how they, you shouldn't move your money, that you could do this, we could do this for you, blah, 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 because obviously they want to keep your money, right? So if you want to break up without having the, the hassle of having to call your old broker, call TD Ameritrade and tell them you have money sitting at this, in this other broker, and they will do all the paperwork and just have you, sign the signature pages and go move the funds to TD Ameritrade. So you don't have to do any of the work. Just call them up and tell them, hey, they'll send you the paperwork, like you fill out the paperwork, like, give us the account number for that broker and whatever and blah, blah, blah. But if you already have shares in that old broker, let's say maybe you already have some shares of Apple or whatever, everything will move in kind unless you actually want to close out everything and bring it in as cash, if that makes sense. So
Yeah,
it's like
it's in cash because
Okay.
I'm too scared to invest. Now I'm getting a little braver here.
Yay! But you're still not going to do anything with it. You're just moving it and parking it to a new home. That's it, right? We're
Right.
still not there yet. We're going to paper trade for a while, learn order entry, but it's good that you're starting to think that you want to start putting those ducks in order so that when you're ready to go, you're
Right.
getting it done. So I'm super excited for that. So good job, Kathy. Excellent.
Yeah.
Yeah, no.
I'm
Yeah.
so happy. You guys are just making me so proud. I'm going to be so happy this weekend. All right, little ones, I have kept you long enough. Unless you have any other questions, you have
you.
homework, you have plenty of things to get you going. Did I give you guys all the links? Let me make sure I gave you everything.
We're just
Did
watching
I give you
movies,
3
right?
or 4?
There's
Three.
3.
Only 3.
The first one you said was the second one, so you missed the first one.
Oh, okay, I did miss one. OHNE. Let's see which one I missed.
We're just watching movies, right? Or did I miss something?
You're watching little clips of the 2 subjects that we talked about, or the two areas that we talked about Monday and today, which is the bullish retracement and the bullish breakout. Okay.
That's setting up our Finviz so we can making settings in Finviz to.
Yeah, so watch this replay, watch today's replay to do that when Jay was doing it. So watch this replay to get that. And then the videos that I send, the YouTube videos that I send you are specifically for the bullish retracement and the breakout. Now, I know you guys, and I know some of you guys are going to want to go and then look at other stuff, which is perfectly fine. But just don't get caught in the rabbit hole and then just overwhelm yourself, right? If you're just curious about what a call option is, or what a this and that is, or if you want to go look at how to put, order entries and kind of get, ahead of the game, that's perfectly fine. Just don't get too caught up in the rabbit hole and then come with like a gazillion questions next week that are not related to what we just talked about.
How do you know me so well?
Where do you go to put in orders?
That's gonna be our topic for next week. It's gonna be a topic for next week, but I will give you guys a little previews because I know you guys are starting to getting itchy fingers. I can see that. I can see you guys are getting itchy fingers. So remember, this is gonna be all related to trading stocks, right? We're not dealing with options at all. So forget all of this stuff down here, whatever that says options chain, okay? We're going to be focusing up here because this is where we buy shares of stock. We can also buy shares just by right-clicking anywhere in the chart and just click buy and buy. We're going to be using the buy custom because we're going to be customizing this in terms of we want to automate everything. So when we think in terms of the set method, we're going to want to have our entry price, our stop loss, and our target. Okay. So when we do the order, it's always going to have an order that looks similar to this, where everything is automated, because we don't want to be sitting here managing these trades every single day, right? You want to set it and forget it. So you are going to have your entry price. Once we do the calculate the set method, and we figure out whether it's got a good ROI, risk to reward ratio. So we're still going to do that, right? We're not just going to blindly buy. We're still going to go through the process of finding our entry, finding our stop, and finding our target, and then putting the order in so that we can automate it and set it and forget it. Okay. So that's what we'll be doing next week. And we're going to spend quite a bit of time doing this, because there are a lot of different ways to enter the trade with, market, stop, limit, and all that stuff. But we'll go through and identify all those different ones. But that's where we will be next week. So if you want to watch videos on that, you certainly can. But don't. What is it, Jay? Super excited? What?
Super excited.
Super excited. Okay, that's a super excited.
He's already
face.
down the
Right.
rabbit hole.
I am. Oh,
Yeah, but there's specific people I'm talking to. Some of them don't have their cameras on, but they know who they are. But Jay is certainly one of them, I can tell.
sorry, I've been up since 2 a.m. and I'm just like,
Yeah, well, I mean, you guys have a 3-day weekend, so again, I don't mind if you go outside of these 4 videos, but again, just don't go too far down the rabbit hole. But it definitely, the more you engage in the markets, the more it will start to make sense, and the more fun it becomes. So, we'll definitely have fun with that. But other than that, guys, I'm gonna let you guys go.
Thanks.
Hey, good night.
Good night. Bye.